The hidden truth about why the housing market hasn't crashed yet. For $20, I can tell you a lot of things. For $30, I can tell you more. And for $50, I can tell you everything. Every media outlet and probably everyone on the planet appears to be discussing when the housing market will crash. Even though nobody knows what will happen, we can look at the statistics and try to predict what is the most likely to happen. So let's look deeper into the hidden truth about why the housing market hasn't crashed yet. Everything in a free market, including housing costs and other expenses, eventually come down to supply and demand. Other factors like inventory, inflation, and interest rates are important, but only to the extent that they affect supply and demand. So what do I mean by demand? Several factors have generated the tremendously high demand we've witnessed over the past few years. Home buyers are the primary source of demand. In particular, during the years of the peak family formation, the largest generation in the nation, the millennials, have driven home buyer demand. Contrary to popular belief, iBuyers and investors are not going into the market. Investors buy only around 19% of properties. In contrast, 43% of all house purchases are made by millennials. They are the house's market's most reliable and robust source of demand. Now, what do I mean by supply? Well, how do prices in any market, including the housing market, decline? When homeowners are unable to sell them. Sellers won't consider dropping their prices until after homes have been on the market for several weeks or even months. No vendor will voluntarily cut pricing. When over 1.5 million properties were on the market between 2017 and 2019, prices continued to rise. We currently have around 600,000. Around 1 million properties are less available now than before the outbreak. The same can be said for days on market DOM, a great indicator of balancing supply and demand. DOM before the pandemic was roughly 45 days. Now, it's still below 20, even with increasing rates. People frequently claim that the market will crash since prices have increased significantly, but this is impossible given the current market dynamics. Because supply is so low, the market needs to see an increase in inventory and DOM before it crashes or stabilizes. We're not just referring to adding a little bit more inventory, we have a long way to go. For the market crash, inventories must at least double or triple over a few months. 3 sources of inventory possible are new listings, more people placing their homes for sale, foreclosures, or new buildings. The number of new listings is going in the opposite direction. But why? This market is not one that people want to sell into. Currently, 51% of homeowners have mortgage rates below 4%. Early indications suggest that demand is beginning to decline. In recent months, interest rates have climbed remarkably quickly. In addition, affordability is gradually declining even though rates are still historically low. Redfin reports that monthly mortgage costs increased by more than 43% in March from the previous year. Reduced affordability will significantly affect the number of households who enter the market. Demand would have to drastically and quickly decrease for the market to fall, but that hasn't happened. Demand didn't disappear, but rates recently increased more rapidly than any other period. The demand side of the equation is not the only factor to consider. The critical issue in 2022 is supply, which requires your attention. Is the housing market going to crash? From 2005 to 2007, the US housing market appeared to be bubbly. Then, with terrible results, home values plummeted. The world economy saw its worst fall since the Great Depression, when the real estate bubble burst. Buyers and homeowners are asking the same question again now that the housing boom is in danger from rising mortgage rates and a possible recession. Is the property market so hot that it will crash? Although housing economists concur that prices could drop, they won't drop as drastically as they did for homeowners during the Great Recession. The personal balance sheets of homeowners today are significantly more robust than they were 15 years ago, which is one clear contrast between now and then. The typical mortgaged homeowner has an excellent credit, significant equity, and a fixed-rate mortgage that is locked in a rate at below 5%. Therefore, there is no imminent catastrophe related to foreclosure. Existing home prices. Property economists have foreseen the housing market's eventual cooling as homes' values succumb to their success for months. Mortgage rates have doubled since August 2021, and home prices have increased far faster than salaries, making housing increasingly unaffordable. Experts predict that property values may decline. Most markets will see a decrease in the upper single digits. Undoubtedly, an 8 to 9% decrease in home prices would hurt the economy. However, this correction won't be as severe as the collapse of the real estate values during the Great Recession, when certain housing areas had value declines of up to 50%. 5 reasons the housing market is not about to crash. Economists specializing in housing give 5 strong reasons why a crash is not near. Due to the continuous lack of inventory, many purchasers continue to be forced to bid up prices. Additionally, it suggests that a price crash in the short term is impossible given the current state of supply and demand. The pace of construction fell short of demand. After the previous recession, home builders drastically reduced their output and never fully recovered to pre-2007 levels. They can no longer purchase land or quickly obtain regulatory clearances to meet demand. Greg McBride, CFA, Bankrate's top financial analyst, claims that increased demand and a supply shortage are the primary causes of the price increase. Supply and demand can balance out again as builders put more houses on the market, more homeowners opt to sell, and potential purchasers are priced out of the market, but it won't happen immediately. Demographic trends are creating new purchasers. Homes are in high demand across the board. Due to the development of working from home, many Americans who already had homes during the epidemic decided that they wanted larger homes. The millennial generation is enormous and at a perfect age for purchasing. Additionally, a young, expanding demographic eager to acquire a property is Hispanic. Standards for lending are still rigid. Liar loans, in which borrowers were not required to provide proof of their income, were widespread in 2007. Regardless of credit history or down payment amount, lenders gave mortgages to the majority of people. But these days, lenders have strict requirements for borrowers, and most people applying for mortgages have outstanding credit. According to the Federal Reserve Bank of New York, the average credit score for mortgage customers in the third and fourth quarters of 2021 was a record-breaking 786. We start to worry about a crash if we notice prices being artificially driven up by lax lending rules. The number of foreclosures has decreased. In the years following the housing meltdown, millions of foreclosures flooded the market, driving down prices. But it's not like that anymore. The majority of homeowners have ample equity in their own properties. As a result of lenders avoiding serving default notices during the worst of the pandemic, the number of foreclosures fell to an all-time low in 2020. When will home prices decline? For years, home prices have grown quickly. Even while the hot market is starting to cool off, an equally abrupt decline is not anticipated anytime soon. According to Bankrate's chief financial analyst Greg McBride, CFA, a price plateau rather than a sharp decline is more plausible. By mid-2023, Matthew Poynton, senior property economist at Capital Economics, forecasts a 5% decline rather than a free fall. All of this directs to the conclusion that property prices are indeed outpacing their ability to be afforded. But this boom shouldn't go bust, should it? But that's all for today. So keep watching our channel for more similar videos, and we'll see you in the next one.